everybody. Welcome to another edition of Stock Talk. My name is Aman. I'm an investment coach here at Sage Investors, and this is episode 26. Common question you get is, what's going on? What's going on in the stock market these days? How should you play things? How should things play out? And I get asked that question fairly regularly. And my answer right now these days is it's been kind of that for the last while, is to me the stock market is just representing a bit of it's like a game of musical chairs. And I think what we got right now is we got a lot of people who are nervous, think that the party, which has been pretty much self-induced by the Federal Reserve in terms of low interest rates, which has fueled a lot of stock prices over the last 5-6 years, is going to come to an end. And people are worried about when interest rates start going up meaningfully, even though they increased it in December, but sort of got cold feet. When interest rates start really meaningfully moving, and that's really going to kill the party. And so right now, to me, I just look at it as a game of musical chairs. People are kind of circling around the chairs, and they're kind of knowing the music is going to stop, and the Fed's just going to cut the music and cut the party off. And they're just worried about being able to have a seat, or if they don't have a seat, being able to run for the exits really fast, and because they think there's going to be a stampede effect. And you can get that sense of it if you look at some of these surveys. Like today, I saw a survey from the American Association of Individual Investors, and basically they survey their members on a weekly basis of whether they're bearish or bullish on the market. Half their members they responded were neutral, and about 30% were bearish. So if you do the math, that's maybe 20% are bullish. And so there's a lot of nervousness out there in the market. At the same time, people want to make money and people want to get in stocks, and so people are nervous, but they kind of don't want to miss any of the last hurrah of returns, and so people are very nervous and they're looking for a way to kind of play on that. And last week I just read a really good blog article by Josh Brown. If you follow the his Reform Broker blog site, it's really cool. I think it's one of the better, more authentic kind of takes on daily market events out there. And he commented a lot about this kind of situation, where we are right now. And right now it seems like the play right now is in terms of getting into low volatility kind of instruments, investing instruments, low volatility ETFs, which are basically essentially investing in stocks, but not the most volatile, high beta kind of stocks, but just very low volatile, very stable prices. The theory being that eventually when the music does stop and the game of musical chairs ends, prices are going to fall down, stock prices are going to fall down, but if you're holding these less volatile, base kind of stocks, that they're not going to fall as much. And if you do need to rush for the exits, you really don't need to be running and sprinting toward the exits like the broader, like if you're investing in a broader S&P 500 kind of ETF. So that's kind of the play right now that I see. And but what the theme about that, what I find really interesting, is this whole theme of low volatility. But it comes back down to what's the flavor of the month? What's the it kind of movement? What's the it kind of investment strategy? And oftentimes when you see these kind of products get rolled out, you're seeing a lot of volatility type based products out there, low volatility, high volatility, whatever. Often that marks when you see a heavy marketing effect, especially from the financial services side, from the industry pushing out product. Obviously that usually to me is a signal where that kind of strategy is just pretty much near the end point. Like the big money or the easy money has been often made in that. And in his blog, Josh Brown, he commented on, I think he quoted it somebody else and saying, what drives stock prices? It's really, or what drives ETF prices or ETF inflows, outflows. It's three things. It's recent performance and what advisors are selling and recent performance. And so right now, what's selling right now in financial services, the product that's moving out, is low volatility based ETFs. So my lesson here is that when you see these kind of sexy kind of flavor of the month kind of strategies come out there, that's usually should be a red flag for you, because chances are it's reached kind of the ninth inning of that kind of strategy, and chances are in no short order that kind of strategy is going to crap out. So what do you do? Well, ultimately it's one of the disciplines that we have to develop as investors, is trying to resist following the fads, trying to resist following this sexy kind of in thing, because a lot of times those type strategies are just short-term strategies that are just going to flame out. And ultimately, at the end of the day, when you're developing your investment ideology, it's all about, for me, and I've commented a lot endlessly, and it's about quality. And to me, the ideology that beats all these little short-term kind of volatility, growth, momentum, all these type of strategies, it's quality. Buying quality businesses at the end of the day. Buying quality, well-run, well-managed businesses generate strong returns on capital, greater than cost of capital, clean balance sheet, selling at a discount. Quality. Those type of companies, those type of investment opportunities are usually long-term, durable companies that are going to withstand volatility. You don't care about volatility because you know the quality businesses are going to be around and they're going to deliver the returns over the long term if you stay patient and if you stay disciplined to your strategy. So, you can hear a lot of things, read a paper about what's, I get asked that question, what's in, what's the thing to do right now in the markets? Well, right now it's low volatility, but from my perspective, it's a fad, and you better be careful in what you do. So that's all I got. It's a quick one for you today. If you have any questions about any investing topics you want to talk about, want me to comment about or blab about, just shoot me a shout through my Twitter handle @SageInvestors. You can direct message me there, or you can go to my website www.sageinvestors.ca. Hit me an email, and I'll be happy to respond and comment in this format. So that's a quick one today. That's another edition of Stock Talk. I'm Aman Rain. My name is Aman Raina from Sage Investors, and we'll catch you again.